Welcome back. This is SeeWing Yee from the Yee Real Estate Network, and I have some very exciting information to discuss. Not only we're going to talk about our iconic co-living investment model, which is the fastest growing and the most lucrative real estate asset class in the world, but we're going to venture into not only the rent by the room to the workforce housing uh, member tenants, people who make anywhere from $30 to $50 per hour. But we're also venturing into the midterm rental space where you rent to someone longer than 30 days, less than 365 days. The midterm rental space, which is a whole new type of tenant profile, which is of higher quality. At the same time, so we create a hybrid model where you can merge the workforce housing tenants versus the midterm rental traveling professionals and families to merge them into a one household, co-living, rent by the room, where people coexist and live in harmony and live in one household, rent by the room with a private bathroom on each room and share kitchen and share living room. And the return for landlords who are embracing this model is a win-win situation. We're solving the housing crisis with the workforce housing. We're solving the midterm rental space, which has been growing very, very fast. Let's dive deeper into it, and you will be very exciting to hear the rest of this presentation. Again, uh, co-living investment model is coming after the midterm rental space. All right, what is co-living? Co-living are designed to accommodate multiple renters under one roof, each with a private bedroom and bathroom, as well as common areas. An innovative, modern, and housing arrangement for sustainable returns. We work with Padsplit, okay? Rent by the room model. We are a new construction type of model, which is very, very rare in the co-living space. I'll discuss more details about it. So Padsplit is our marketing platform. They are not property manager. We have our own separate co-living property manager. Okay, so let's talk about Padsplit right now. Padsplit is, pretty much similar. Passport is pretty much similar to short-term rental using Airbnb as a marketing platform. So Passport is our Airbnb version of co-living rent by the room model. All right. So Passport, as you can see, they're growing by leaps and bounds. I have too many slides to show. You may pause each slideshow on your own to dive deeper into the contents within each slide screenshot. All right. Suffice to say, the current Padsplit markets they are already venturing into 40 different markets in the country, as you can see, and they're growing exponentially. How? Aligning incentive with has fueled Padsplit growth in the co-living rent by the room model. And right now, 2025 there are almost 30,000 Padsplit units located across the country, and they've been growing by like 50 to 100% in the past few years. Only a few years ago, back in 2019, there were a handful of co-living properties that are marketed by Padsplit. Now look at this exponential growth year over year from 2024, 16,000 units or co-living units located in the country. Now, a year later, 2025, 29,000. Once the 2026 data comes around, which is toward the end of this year, who knows, right? We can grow from 29,000 co-living total units that are marketed by Padsplit to maybe, who knows, 40, $50,000. And beyond the next few years, it'll grow exponentially for very obvious reasons. But we are going beyond the workforce housing for member tenants. We're going to enter the mid-term rental space, which is a completely different tenant profile, much higher quality tenant profile who are not restricted by income level. However, this mid-term rental profile, if they're willing to rent by the room within our model, rent by the room model, they can potentially save thousands of dollars per month. Okay, so MTR, short for abbreviation, is longer than 30 days, less than 365 days, furnished, just like co-living, furnished by the landlord. Our core tenant profile for our co-living model is the workforce housing, people making $30 to $60 per hour. However, it's not a boarding house, it's private room for working adults living with dignity and independence. And I'm going to dispel all the misconceptions, if you will, around co-living. I know this is a new real estate asset class, one of the fastest growing real estate asset class, co-living investment model. Especially for us, we do new construction. We rent one bedroom. Okay, let me get this straight. Our model is greater than anything else out there in the co-living industry. Most of the $29,000 29,000 units spread across the 40 different real estate markets in the country, they are renovated from a regular traditional old house, perhaps 3 bedroom to 2 bath, into 7 or 8 bedroom, 2 bath, like 4-to-1 bedroom to bathroom ratio. You have 4 tenants sharing 1 bathroom. Our new construction model is a game changer within the co-living model. I just want to emphasize this because we're doing this. We are only new construction model in the country that I know of. The majority of the 29,000 existing Padsplit co-living units across the country, they are not 1 bedroom to 1 bathroom ratio. Okay, 1-to-1 ratio. They are not new construction. They are older houses. And so therefore, our quality, our premium rents are higher than typical co-living house. I just want to make this a value add, tremendous value add proposition. It'll create a much better living experience for our member tenants, workforce housing, and mid-term rental tenant profile as well. All right, so I want to make that clear. So let's continue our presentation. So again, this is a core tenant profile, workforce housing. People who cannot even afford 1 bedroom rent, typically on a particular metro, paying $1,400, utilities included, they have to pay. Our core workforce tenant profile are not exhaustive, is more less than this, but that they people, working paycheck to paycheck, hourly wages, retail workers, fixed income retirees, young professionals, restaurant, retail, wholesale, these type of workforce tenants. Okay, this is a core profile because co-living fills a gap between unaffordable apartments and unstable options. We are addressing a acute historic housing crisis. People can barely afford to pay the rent. They are saving 50%. These workforce housing people, they're saving 50% from their paycheck. That's why they love our co-living rent by the room model immensely. Okay. And not every co-living operators have the ability to venture into a secondary tenant profile that we are doing it because we have 1 bedroom to 1 bathroom ratio. We have new construction. We provide, better location, better amenities, close to hospitals, close to a major employee in the hub because we know what we're doing. Okay, we are in the market that services this hybrid model. Okay, and this secondary mid-term rental profile of tenants. Okay, they are traveling professionals, corporate relocations, insurances placement, relocation clients, the whole 9 yards. So amazing, merging workforce housing and the mid-term rental longer than 30 days, less than 365 days with this much higher quality tenant pool. Furnished Finder is the marketing platform behind midterm rental space. They've been around for 10 years. Look, currently, I know the co-living model have only around 30,000 plus units by Padsplit across the country. It's going to grow exponentially the next few years. But the midterm rental, the Furnished Finder marketing platform already have 300,000 properties rented on their website. So they like, what, 10 times larger? Yeah, currently the midterm rental tenant space as a class, midterm rental, are 10 times larger than co-living. But we're catching up. So imagine we are partnering. Padsplit is not official yet. Padsplit is partnering with Furnished Finder to co-merge of obtaining their tenant profile into our rent by the room co-living model. But I could assure you that most of the co-living units, because they do not have one bedroom to one bathroom ratio, they're not going to be as lucrative as to our investment model of brand new construction. We build a co-living model from the ground up, new construction. I'll give you more details about it, and so therefore our returns going to be higher compared to a traditional regular co-living model out there right now, operating out there, but it's even better than that. I'll share that with you. Okay, so the Furnished Finder marketing platform for midterm rental is growing by leaps and bounds, as you can see. They've been around for 10 plus years. We just barely kind of started in the past 3, 4, 5 years, the co-living model with the Padsplit. So higher renter profile than any workforce housing. So good merging of two different tenant profile. The midterm rental tenant profile, they are categorized as 35% business travelers, 25% healthcare professionals, 20% relocating families. Okay, I look at the details of it. Okay, these people have money. They are not living well. They're not making $30 to $60 per hour. They're making more, like $50,000 to $100,000 per year or more. They're just doing this type of temporary housing with furnished housing. They want to live in a good place, good clean place, in a good location, in a good room. Our midterm rental profile, they're gonna rent per room from us instead of renting a whole house as a traditionally provided in the current midterm rental space. Okay, monthly rentals are good business for landlords. Okay, 3 month stay typically for midterm renters, longer stays, less turnover, helping travelers feel at home. All right. So, yep, here's a breakdown again of all the midterm rentals out there across the country. 300,000 hosts, landlord hosts, midterm rental. 18% are healthcare professional, traveling nurses, traveling professors, medical interns, the whole 9 yards. 30% business travelers, 23% relocating families, 3% digital nomads, 13% academics, and 14% other groups. So midterm rental tenants rent the whole house typically. So therefore, the landlords and the hosts that are venturing into MTR space, they're collecting 50% or more of higher rent than a traditional long-term rental. Okay? Are you very clear? So let me give you some deeper dive. Renting the whole house on a midterm rental to those tenant profile, as you can see, are quite lucrative if one do a good job. If a host are doing a good job, not all hosts does a good job in the midterm rental space, Furnished Finder, the marketing arm, but the host does a good job renting by the whole house. They rent 50% or more rent on a furnished rental than a traditional long-term landlord. As you can see, typically in Jacksonville, Florida, we just pick on Jacksonville for right now for this presentation. Look, this rent by the whole house, midterm rental, Furnished Finder marketing platform. Look, $2,500, $4,900, $3,200, and so forth and so on in the Jacksonville metro market. Okay, every metro is different, of course, right? You see that? But we're not doing that. So there are other regular amateur landlords in the Furnished Finder marketing platform. They're also rent by the room, but these are not Padsplit host. There's a regular host, regular mom and pop owner occupied homeowners, wherever they are throughout the country. They also are marketing their one bedroom, one bath, typically from their single family home or whatever across the country. So they do not have as many one bedroom to one bath uh, 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 units available as opposed to the whole house in this mid-term rental space. Make sense? So we, along with, or conversely, we as a Padsplit host operator entering into the hybrid market, into the mid-term rental pool, we are more strategic than a amateur mom and pop landlord who are doing the regular marketing into the Furnished Finder one-on-one bedroom. But the majority of the Furnished Finder platform, they are renting by the whole house. Therefore they're charging a lot of rent. Why not? Why not allow Padsplit co-living host landlords like yourself to enter the hybrid space, especially we have a high quality one bedroom, one bath model in good locations. Okay. But if you have, as a co-living operator, if you have 8 bedroom, 2 bathroom, whereby 4 tenants sharing one bathroom, I don't think those traditional mid-term renter, even with a steep discount, rent 120 square foot bedroom sharing a bathroom with 4 other workforce tenants. I don't think they can do that. So our model, new construction, like I said, 1-to-1 ratio, will most likely going to be able to convince some of those mid-term renter, those higher quality tenants that have a regular job, that to entice them to rent our co-living model, one bedroom, one bath. Make sense? All right, I just want to make this clear distinction. So our co-living model is rent by the room using Furnished Finder also, which we're partnering with Padsplit anyway. So at the end of the day, look at the numbers. The returns are already high. Our returns are extremely high. The co-living model right now, whether it's a renovated one, 8-2 ratio or 7-7 ratio, we're already renting on the average, depending on what market in the country, workforce tenant pool is like $1,000 per month. Okay. Of course, landlords can pay utilities and everything else. So the member just come in, just bring their toothbrush. That's it, and they can occupy the room right there and rent for a minimum of 3 months. Most of the tenants that rent from us, they stay from 6 to 8 months. Some a lot longer. Some 2 or 3, 4 years. They are long-term renters in our co-living model, rent by the room. But if we're able to find a way to be creative and market to the mid-term rental pool, where we can charge them $1,300 per month, a few $100 more than a traditional workforce, lower end demographics tenants, hey, your return is going to be exponentially higher. Okay. Furthermore, because our 1-to-1 ratio new construction, from time to time, our investor landlord hosts, if you will, on a Padsplit platform, uh, they may be able to. Normally, when you rent by the room, co-living model, you rent to one person only, no pets, nothing, no non-smoking, hopefully, right? But of course, the host, the landlord, makes the rule from time to time, because our new construction 1-to-1 ratio is so desirable, and the space is still pretty. We can accommodate like a husband and wife we accept, from time to time, we accept 2 people per room, or boyfriend, girlfriend, or one partner, the other partner. You as a landlord have a discretion. Imagine has some additional discretion. In the end, Padsplit does not, tell you what to do, right? Padsplit have their own unique compliance requirement that the host needs to adhere to, but not if you have a 7 to 7, 7 bedroom, 7 bathroom on a co-split, a co-living model. Uh, I'm not saying that you have to rent each room potentially to 2 people, although you could. Not that easy, not that easy. Imagine out of the 777 model, if you can rent it 2 or 3 of them to a midterm renter, or maybe 2 or 3 of the rooms for two people, they will pay higher rent. So your returns, you just do the math. Your return your cash flow will be much more significant above and beyond the lucrative return you're getting with the $1,000 per room per person as it is using strictly workforce tenant. Okay. Whew, so best of both worlds, the co-living model. So in the end, like I said, 99% of co-living rentals across the country cannot effectively market to the MTR tenant profile due to lack of 1 bedroom, 1 bathroom ratio. Most of those existing renovated older co-living type of models across the country, they are 8 bedroom, 3 bath, or 7 bedroom, 3 bathrooms. They cannot entice those mid to renter to come in to living this kind of under below standard, below expectation environment. However, our new construction 1:1 ratio, we believe we can accommodate the mid to rental space, so we can do a hybrid, right? So older properties that lack adequate amenities to cater to MTR tenant profile, they're not going to be successful. So our performance metrics with without the MTR tenant profile, even strictly with workforce housing, they pay $1,000, per room per month. We're still getting at least 90% occupancy rate, less than 1% evictions rate. That's right, because we vet the tenants very closely, doing all the background check, criminal check with the workforce housing types, the whole 9 yards. Even if there's a vacancy, right? A member tenant leaves. Hey, all I gotta do is spend $50 to $100 to clean out the room, and then refill the room within 1 to 2 weeks using Padsplit marketing. Okay, again, much to your surprise, the minimum stay per the Padsplit requirement for our tenant profile is at least 3 months. That's a contract you're going to sign, but many will stay on the average 6 to 9 months or longer. Longer stay equal lower turnover cost, the whole 9 yards. Make sense? All these metrics are very, very realistic, and especially at the location that we're in and how our team picks those neighborhoods in different markets and so forth. All right. So this is a typical 1 bedroom model. This type of marketing furnished finder is marketed by a regular landlord, have nothing got to do with co-living, got to do with Padsplit. This is the existent marketing platform that we're looking at, Furnished Finder, okay? And they are, charging $1,300. They can do it. Our co-living Padsplit model can venture into MTR space, into Furnished Finder, and find someone willing to pay us $1,300 instead of our benchmark $1,000 per room per month. Make sense? See, all the amenities for all furnished, just like a regular Furnished Finder landlord. All right. Now you know. Okay, Jacksonville is a hot market. We have other markets we'll share with you accordingly. Again, this is the Furnished Finder marketing 1 bedroom. We can do the same with our Padsplit co-living 1 bedroom, 1 bath model. And we can be very, very successful. And our landlord, host, investor can make tons of cash flow way beyond what you thought was possible. Of course, Furnished Finder, they have other resources available. If you sign up with them, you pay a one-time fee of $199. Again, Furnished Finder or Padsplit, they are not property managers. They just help you market and get the tenant, collect the rent, do all the paperwork, do all the bookkeeping online. Technology is Padsplit is merely a technology platform, just like Airbnb, just like a Furnished Finder. Okay. All right. So that's all I have on that. So the solution to the co-living model, as I've been presenting to you, is hybrid of three strategies. Have a short-term rental economics and very high return, short-term rental Airbnb type, right? We have the best of all three worlds. We have the midterm rental stability. We can incorporate the midterm rental profile, which is a very high quality one. Long term, right? Rental consistency. A lot of our members will stay longer than a year, right? Like 30% of our members stay longer than a year. 2 years, 3 years are not uncommon. Right. So finally, our three co-living markets that we are presenting are Jacksonville, Florida, Tampa, Florida, and Houston, Texas. Developing areas of growth with the hottest growth markets in the country, and we are built specific for co-living occupancy. Great modern layout, 1-to-1, one bedroom to one bathroom ratio. So it's just very, very nicely done. Of course, you have to pay for the furniture package, the whole 9 yards. We'll talk about that some other time. So very nicely built. Our builder know what we're doing. Our builder's been around for years. They understand the co-living model. They understand the room configuration, and they built it for you. And most important of all is if you watch my other YouTube channels, I produce quite a bit of co-living videos lately. You can feel free to watch that. But here's a single family home, 1,900 square foot, 7 bedroom, 7 bathroom, right? Only 320K. You put 20 to 25% down payment. You get a no doc DSCR loan only. That's the only thing you can qualify, which is fine. No doc loan, debt service credit ratio, which is fine. The 30-year fixed rate is very competitive, uh, in alignment with the regular investment loans you get out there. Look at the monthly cash flow, which is a whopping almost $2,000 net monthly cash flow. It's just absolutely crazy. Cap rate 13%, annual ROI 27%. So this is a seven model. You can digest the pro forma on your own. The returns are crazy. All right. Look at the metrics is amazing. Okay. And then we have a duplex model, 1414, 7 bedroom, 7 bathrooms on one unit on one side, 77 on the other side, and we collect $1,000 per month. Very conservative benchmark. We pay 25% down payment. Your gross monthly rent is in excess of $14,000 on 14 doors, multiple streams of income, and your monthly net cash flow at 25% down payment is approximately $5,000 net cash flow after all the expenses, debt obligations, 5% vacancies, 5% maintenance and upkeep, the whole 9 yards, still pocket five whopping grand net passive income cash flow per month on this 1414 iconic model duplex. And here are the details of the pro forma to analyze it on your own. And let's move on. And our new market in Houston, very fast growing, very open. The co-living model, the local ordinance and the city of Houston, they love the co-living model. They are embrace it. And this is a single family home, 10 bedroom, 10 bath. I know a little bit more expensive, 650K, but you can rent for excess more than $1,000 per room. Okay, this is a higher tenant profile, higher workforce housing. You can incorporate the mid-term rental space into this model in Houston, Texas. At the end of the day, after all the expenses with 25% down payment, with 20% down payment, because this is a single family home model, your net cash flow is almost $3,000 and your cap rate is almost 12%, annual is 20%. And here's a further more detailed breakdown of the pro forma of the 10 bedroom model in Houston. And then finally, Tampa, very higher quality tenant profile, 8 bedroom, 8 bath in Tampa, Florida. Similar single family home, uh, 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 construction, 600K. I know, 20% down payment, probably 25%. That's fine. The gross rent is almost 10 grand per month on 8 doors. So higher quality tenant, better neighborhood, B minus neighborhood perhaps, or C plus in Tampa, Florida. And monthly net profits is 2 grand after all the expenses, right? And annual cap rate 10%. ROI 16.5%, way above the benchmark from traditional rental housing, needless to say. Okay. And here is the details, the pro forma. Okay, analyze it on your own, digest it on your own. The numbers is off the chart. And yeah, so at the end of the day, what options do you have? Go to the traditional investing that people have been doing all the years, burst strategy, fixer upper, flips, self-managing long-term rental landlord. Most people, they don't know any better because they continue to buy older properties in the Midwest or Northeast somewhere, fixer upper and in a C minus class neighborhood, 100-year-old homes. People still buying them. They don't know any better, right? They have not found us. They have not found our new construction co-living model, hybrid model, renting for uh, workforce housing and the midterm tenant profile. Okay, so soon they're gonna find about my company, my organization, our model. But meanwhile, they are buying this, very old houses. I know it's cheaper, cash flow quite nicely, but look at the CapEx expenses, maintenance and upkeep on a much older home in an area in the Midwest somewhere that are not growing as fast. Look at all the maintenance and vacancy, and C-class nature, double-digit maintenance and vacancy, and all those kind of things. I don't know about you, but I'm not gonna do traditional long-term rental anymore. I'm venturing into co-living model, and you should too. So we don't our new construction model, is to be built. Okay, here's the process, right? If you pre-qualify after our initial consultation, whatever, then you join our wait list. Wait until we get the permit to build a lot for you. So the timeline is not going to be easy. It'll be a 6 to 8 months total timeline. As you can see, you deposit several draws into the construction loan, the whole 9 yards, deposit several chunks of money as part of the down payment, typically 25% down payment, whatever. Then you close the loan within 5 to 6 months. Houses finish. Then Padsplit will help you lease up all the rooms. Take 30 to 45 days to lease up all the rooms you have. Then you have a full stabilization within 9 to 10 months. I know, kind of a long time frame. At the end of the day, hey, you spend 1 or 2 hours, this is turnkey, I mean, totally almost passive, right? Because you have Padsplit and you have the co-living property manager. You pay them 8% each, 8% of the gross rent to Padsplit. You pay 8%, another 8% to the co-living property management. They do everything for you, regardless of where you live in a country. At the end of the day, per property, you spend 1 or 2 hours per month in so-called managing a property. Is all hands-off investment. So you don't have you don't need a second job, nothing like that. Okay. So you can achieve time freedom. That's the key. All right. So anyway, sorry for taking longer than usual. No other organization like us that have the ability, no other organization is building new construction co-living models anywhere in the country, and there are like 30,000 hosts are presenting co-living to their tenants, but nothing come close to us. So we have the unique, thinking outside of the box model that will produce higher return, lower risk, and you can scale the portfolio. We have the whole turnkey. We have done all the research and due diligence. We have teams on the ground that vetted everything, each neighborhood. We know all the permitting, all the regulation, everything in the particular neighborhood. All right, thank you so much. And please, if you see any value from whatsoever from this presentation, please like and subscribe to my YouTube channel. And finally, put your email into my website below So you can become a free member of our real estate network. And each week on your email inbox, you will receive free information on not just co-living investment information, but other markets that we also do, we also represent, and we'll provide free content, free information on real estate market, real estate economics, real estate investment opportunities, the whole 9 yards. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Thank you so much. I'll see you next time. Have a nice day. Bye-bye.